In a historic development, India and the European Union have signed a free trade agreement, opening preferential entry to over 99% of Indian exports into the EU. This landmark deal gives a huge trading impetus to India. Amongst other things, India will reduce the prevailing high tariffs on automobiles manufactured in the EU, making domestic markets accessible to European companies. Duties on alcohols and spirits will also be reduced or eliminated in the near future, making this agreement a win-win for both blocs. Abinash Verma, an ethanol expert, ex-bureaucrat, former Director General of ISMA, and promoter shareholder of a grain-based ethanol plant, emphasizes that ethanol should be included in the EU's zero-duty import list. This would help absorb India's excess ethanol production and create a steady market for producers. Thanks to very encouraging policies of the Government of India and several state governments, investors have responded strongly. Over the last 3 to 4 years, new ethanol production capacities of around 12 to 13 billion liters have been set up. This has resulted in surplus production of alcohol and ethanol. Demand growth has not kept pace, and until flex-fuel vehicles roll out in India, we must find ways to create extra demand to consume the ethanol being produced. The EU encourages ethanol blending with petrol for environmental reasons. With souring relationships between the US and EU, the time is ripe for India to push ethanol exports to Europe. Currently, import duty on denatured ethanol in the EU is around €102 per kiloliter and €192 per kiloliter for undenatured ethanol. That converts to 11 Indian rupees and 20.90 Indian rupees per liter respectively. Under the FTA, India will be able to export duty-free to the EU, making Indian ethanol highly competitive. The EU already imports ethanol from the US, Brazil, and Pakistan. But duty-free imports under the FTA, which will not be available for the US and Pakistan, will give India a competitive edge. With large ethanol production capacities already set up, India can be a regular and reliable supplier to the EU on a long-term basis. We have enough raw material in the form of maize, damaged food grains, and sugarcane to sustain this supply. Ethanol exports to the EU can create a stabilizing effect on India's surplus ethanol management. Some of the surplus can be absorbed in the EU if India is able to export duty-free under the FTA. However, the government of India must quickly allow 1G ethanol exports, made from grains and sugarcane, as currently only 2G ethanol exports are permitted. By prioritizing ethanol in the India-EU free trade agreement, India can stabilize its surplus, strengthen its rural economy, and position itself as a reliable green energy partner for Europe. Zero-duty access is not just a trade advantage. It's a strategic opportunity for India's ethanol industry and for sustainable global growth.